Hi, welcome back to Joe Blogs, and as you can see, not in the Joe Blog studio again. I'm still here in Spain enjoying this fantastic weather. And if you're thinking that there's a problem with the audio, you can hear a bit of a hiss, it's not a problem. It's actually running water from the pool that's behind me. There's like a overflow pool thing that sort of makes it constant running water. So apologies for that, but it gives you a bit of a holiday vibe. And the reason that I wanted to post this video is to talk to you about what's happening in the Russian economy, because the European Union has just approved its 18th round of sanctions. And you might be thinking, oh, more sanctions, yada, 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 who cares? None of them are working. But the sanctions are definitely having a massive impact on the Russian economy. Russia is like a super tanker. Lots of people are messaging me all the time saying, you're constantly saying the Russian economy is in trouble. I'm not seeing it collapsing. You're talking a lot of rubbish. But with a super tanker, it takes a long period of time for things to actually come to the surface. So Russia had a lot of money tucked away in its national wealth fund, and it's been gradually depleting that national wealth fund over the last 3 years. And the sanctions are now starting to bite. But the European Union and the US have realised that they need to target in on certain areas where Russia has been managing to avoid the main impact. And one of those areas is the price cap. Now, if you follow the channel, you'll know that the price cap that was initially introduced back in 2022 had a set number of $60 per barrel for crude oil and roughly around $100 for all refined products. And that was fine when the price of oil was sitting at around $85 per barrel. But if you've been following the channel, you'll know that over the past few months, the price of oil has come down significantly. And the price of Russian oil was actually trading at around $55 recently. So a $60 price cap obviously doesn't work when you're selling it in the open market at $55. So the European Union has now acknowledged this, and they have changed the way the price cap mechanism works. So what is going to happen now is that a 15% reduction against the market price will be used. So, and that's going to be over a last 10-week period. So it'll be the average price over the last 10 weeks. Sorry, if you can see the camera shaking a little bit, it's because there's a bit of a breeze coming in and it's affecting my tripod. But hopefully it won't fall over. If it does, then I'll have to restart this video. But apologies if you're seeing a little bit of movement on the screen, but it's the breeze. You wouldn't know it because it's absolutely boiling. So this 15% reduction will now be applied. So if the market price of Russian oil or oil generally is $60, then that would basically mean that Russian cap would be reduced to $51 because it would be 15% below where the market is. So that's broadly speaking what we're looking at right now. So the new cap is going to come in somewhere just above $50. And if the price of oil continues to drop, then the cap will also go down. So we could quite feasibly see that cap dropping to $45 at some point over the next 3 to 6 months. And the problem that that means for the Russian economy is that they're going to get a lot less income. And if you've been following the channel, you'll know that the budget for 2025 originally assumed that Russia was going to be selling its oil at $70 per barrel. Now, the market has come down significantly below that anyway, on average. So Russia's been achieving broadly about $60. And so they had to revise the budget downwards to $57 as the average assumed income. But clearly with this new price cap, it's going to be even lower. And the full year for 2025 is already looking like a huge deficit, somewhere in the region of 1.7% of GDP. And with this new price cap, it's likely to get worse. So I think the price cap is a really big positive step forward from the sanctions point of view, because it's actually acknowledging that having a fixed price doesn't work when you put it in place for a number of years, because the price of oil goes up and down all of the time. So having a hard line $60 didn't really make any sense. Now, the other thing that has happened from the new round of sanctions is that Russia is now also facing sanctions on its secondary products. So what we've seen over the past few years is that countries like India and China have been buying large quantities of Russian crude oil and then passing that crude oil through their refineries to make petroleum and diesel and gasoline, those sort of things, and basically using Russian oil to make a profit. And so Russia has seen a large increase in the demand for its crude oil, which is then being sold back into the market, and countries in the West that have sanctioned Russia have actually ended up buying some of this oil that originated from Russia. Now that is going to be cracked down in these new round of sanctions, and an Indian oil refinery that's actually owned by Rosneft, the Russian oil company, has been hit directly with sanctions. So that refinery will no longer be able to process Russian oil and sell it into the international markets. It's now been sanctioned itself. And in addition to that, another 20 Russian banks have also been hit with a new round of sanctions. So the net is closing in terms of all of the financial institutions. We've seen some of the largest banks in Russia already being hit with sanctions, but these new sanctions are really going down the spectrum to make sure that transactions can't make it through the net, that basically Russian companies can't just open accounts with smaller Russian banks and then get their processes going through there. So we're seeing the European Union, sorry, it's getting quite windy, so I'm having to just make sure my notes don't blow away. So we're seeing the European Union really now starting to hone in on all of the financial institutions. And along those lines, 2 Chinese banks have also been included in this round of sanctions. And these are banks that sit on the border between China and Russia. So they've been facilitating lots of transactions, basically enabling Russian companies to do business in China without basically having to worry about the sanctions. So the fact that those banks have now been targeted directly means that Russian companies are going to struggle to be able to find ways of accepting payments for the Russian oil and other fossil fuels that they're selling into China. So that's going to have a big impact as well. And one of the interesting things that the European Union has included in this round of sanctions is that they have now directly sanctioned the Nord Stream pipelines. Now you might be sitting there thinking, well, that sounds crazy because they were blown up in 2022, and they were, but not all of them were blown up, because there are multiple pipelines for the Nord Stream, and there's been a lot of talk from Russia's perspective that once the war in Ukraine is over, they would like to start using those pipelines again. They'd like to start selling oil back into Europe, to Germany and anybody else that wants to buy it. But the European Union has now directly sanctioned those companies and those pipelines. So in order for Russia to ever use them again, if they were able to repair them and get them operating again, they would have to have those sanctions lifted. And obviously, the reason why the European Union has put these sanctions into place is to encourage Russia to stop the war in Ukraine. That's basically what they've put in place to do. So there is no way that Russia will be able to sell any oil through the Nord Stream pipeline, any gas, no oil goes through it, it's gas, any gas through the Nord Stream pipelines until an agreement is signed with Ukraine and the European Union is happy that the war is over and they're comfortable for all the sanctions to be lifted. Sorry, there's another big gust of wind coming in, so you may have seen the screen wobbling there. And so I'm just running through my notes. Oh, the one last thing that's included in the sanctions is that more vessels that Russia has been using to transport its oil, so the Grey Fleet and the Dark Fleet that we've talked about a lot in previous videos, these are vessels that are owned by non-Russian companies. So there may be some sort of holding company in the Cayman Islands or Bahrain or some tax efficient jurisdiction. So it's difficult to trace exactly who owns those vessels, but a lot of those vessels are moving Russian oil off the radar basically. So they're switching off their transponders. It's very difficult to track what's happening with those ships. There's a question mark as to whether or not they've got insurance. A lot of issues around those vessels because some of them are very old and potentially at risk of having operational problems. But more of these vessels have now been sanctioned, and so the number is now over 400. And we're talking about some giant tankers here. They can take millions of barrels of oil in a single sailing. So they've now gone onto the list. So the walls are closing in on Russia. These sanctions are getting more and more definitive. It's going to be more difficult for Russia to be able to bypass them. But I think the biggest single issue in today's video has been the change to the price cap, moving it from a fixed figure of $60 per barrel to 15% discount. That is going to be a dynamic mechanism that will move with prices and will cause Russia major problems. And Russia will definitely see a reduction in its income as a result of that cap. So the overall summary of today's video is that the European Union has now issued its 18th round of sanctions that we've seen since the war in Ukraine started. And those sanctions are becoming more and more comprehensive and definitive. And what the biggest thing is in those sanctions in the latest round is the introduction of a dynamic 15% price cap. That means that as the price of oil goes down in the international markets, so does the price cap, meaning that Russia will never be able to benefit from selling its oil for full price, because the West will be able to focus in on all of those movements of oil and stop them happening at a higher price. That will reduce the amount of revenue that Russia is earning, reduce the amount of income that the companies in Russia are earning, therefore they'll pay less tax. The Russian authorities will therefore receive less tax income. That means that GDP will slow down, and that's on top of all of the other sanctions that have been brought in. So the overall summary is that this represents more bad news for Russia, represents more loss of income and reduction of GDP, and will hurt the Russian economy. So hopefully you've enjoyed today's video, you've enjoyed seeing me in this setting. Maybe the camera was moving around a bit too much, apologies for that. Maybe I'll go inside if I make any more videos, because there's no wind inside where I'm staying. But I thought it was nice to actually come out and see a little bit of sunshine, because I've usually got trees behind me, but they're artificial ones on the wall. These are real trees, cactus and some other stuff, although that olive tree doesn't look in such good condition. So I wanted to just share this with you. It is a bit hot here though, even though it's early evening, it's really boiling still, so this wind is quite nice. Hopefully you've enjoyed seeing me in this setting, you've enjoyed the content of today's video. If you have, then please give me a thumbs up. And thanks to everybody who's supporting me. If you bought me a coffee or sent me a YouTube super thanks, or signed up as a patron or a YouTube member or a Buy Me Coffee member, thank you so much for that support. And here's something to put a smile on your face.